The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, Ron here at Ablesys. Welcome to the webinar. Take a look at the different signals and show you the right ways to use the software, and be glad to answer your questions and help anytime. So let's jump in. Oops, let me get this. That shouldn't have been there. Okay, great. Now we've got a stock chart up here. I always start off first half of the webinar with a stock chart. And I like the 130-minute daily combination, and it's right in your workspaces if you have the Abletrend platform. So what you have to do is just click like File, Open Workspace, and all your pre-made workspaces will be there. This is a really good chart for swing trading. Really good chart for swing trading. If you like to just stay in the trade, maybe a few days, possibly a few weeks like this one here. Roku, it just keeps on going higher. So we'll stay in it forever if it keeps going higher, of course. So this is a really good swing trading chart. So let's jump in and take a quick, little closer look. So you can see back over here, obviously we've, got the buy signal here. You got to get that arrow, or it's an X on some charts. It's the same thing. It's the upper time frame, meaning the daily signal. It's the daily signal. It also was support. That's why the prices came all the way down and stopped right at the arrows. Great places to get in if you're not in at the beginning of the trend would be at the arrows or the dots. Well, the market's in, obviously a very powerful uptrend all year. So when the prices get to the dot right there, great place to buy it or add to your position if you like. Yeah, another place here. See, hits the blue dot. Hits the blue dot 3 or 4 times, and then it goes higher. Hits the blue dot a couple times, and then it goes higher. Hits the blue dot here and goes higher. So those are great places, especially the first sweet spots. Those are called sweet spots when the prices hit the dot. Now you have to have a blue bar and you have to have a blue arrow. So you gotta have both. Gotta have everything all, gotta have both. Everything has to be the same color. Or I shouldn't say that. It could be a green bar. It could be a green bar. You can still get in at that point. That's fine. Green bars are fine. Being that we're in such a strong uptrend. I wouldn't go on a green bar if you were shorting it or buying puts on a downtrend, being that the market is, is always in, 4 to 5 days, the market goes higher. 80% of the time the market goes up for the day. So certainly this year might even be even higher than that. Now, that doesn't mean a big downtrend can't come. The market, I think, is just really oversold, but it got to be a pullback. Maybe, maybe in who knows, maybe in January or something. But I don't know. We just go. We don't look ahead because you get in trouble that way. Just take it day by day, and anywhere the prices hit the dots, those are great places to get in. In fact, it hits the arrow here. Now, here's the only thing. This trend's been going on for 2 months. It's just not going to last forever. So, I just, be a little cautious, but, if somebody wanted to, right here, just this morning, it hit the tip of the arrow right around 331. So, it already closed at 339 at the end of the day. So just good places to get in, And the whole key is, you have to have the blue arrows. Or again, it could be a big dot on your chart. It could be a cross. I just make mine arrows because I just, makes it easier for me to show everybody. It looks like it's, you can see when it hits the arrow, it goes higher. Same thing with the dots. Those are support points, very accurate support points. So that's why the prices hit them and go higher. Oh, hi, Howard. Yeah, you're welcome, Sarah. Greetings to you too. Happy holiday. So let's jump in and take a look at more of a trend chart. Here's the Mini Nasdaq. This is one of our favorites for day trading. This is for the trend. This is not for scalping. I'll get to that chart last. This is for trend trading. You like to stay in the trades longer periods of time. You're going for the home runs, but there's going to be a lot of volatility. There's going to be a lot of ups and downs. Like here. Even just looking from here to here, like, wow, what a great move. It's a big money. Yes, it was. However, it went to here. From here to here, it doesn't look like much. That popped up 20 points. That's $400 in your account that, went against you. But then it came back. Then you got 600 back. And you got 400 the other way. Then 1,000 this way. It's nuts. It's wild. If you're okay with staying in that, handling that kind of drawdowns, seeing your account go up and down a couple of $100 every minute, you're going to make more money that way. But it's much harder to do that. So just, everybody's different. Just depends on whatever you're comfortable with. We got the triple confirmation trade. Obviously the triple confirmation sell signal right there. You got to have that arrow. You got to have the higher time frame, because that just means the bigger trend, is pushing it. It's like you got the wind at your back. So when you have everything red, we're going to buy it. When you got everything blue, right in here, it's the open of the market. You're going to buy it. I'm sorry. Everything red, you're going to sell it. Buy on blue, sell on red. Next, okay, when would I get out of this trade over here? Well, there's two greens and at least 10 points in profit. So that's a couple $100. I don't want to give that back. So stop would start out at the top of the red bar. Top of the red bar is where the stock's going to stop, because the red dots are like 40 points away. There's no way we're going to put a 40-point stop. So just put your stop at the top of the red bar, and then and don't get into the trade till the bar closes. So there's the two greens. We put the stop just a little. We're moving much closer now. Doesn't hit it. Great. Two greens. Doesn't hit it. Great. Two greens here. Stop goes there. Hits it here. Don't get out on a red bar. We're going lower. Stay in it on a red bar. It's definitely, the odds are dramatically in favor that it's going to go lower. So let's say we shorted it here. Technically it's there, but you're still above the blue arrows. I'm more comfortable when it goes below the blue arrows. So we're going to short it here at about 75, and then we're stopped out here at 35. Let's even call it 40. Make it actually worse than it really was. That's 35 plus $700. Ableton gave everyone there on that trade. So that's a sweet move right there. And then a clear-cut no trade zone. You got red above, you got blue below. Leave it alone. Unless you have everything blue or everything red, leave it alone. It means there's a high probability it's going to be choppy, and nobody can win in a choppy market. That's the beauty of the indicators and the double time frames in one chart, is that it filters out a lot of false signals and a lot of chop. Okay, now we have a losing trade here because that's a valid buy signal. Triple confirmation, all the time frames. 1 minute buy signal, 2 minute, 3 minute. But we do lose on that trade. We're going to get back like 10 points because we get the red bar with the red dot. One big giant no trade zone here. Again, red and blue together, no trade. This was a sweet, clear-cut, obvious sell signal. And here's the thing. You're under the arrows. You're under that 3 minute support point. You're busted right below that. That's great. 3 minute sell, 2 minute sell, 1 minute sell, red bar. Boy, that doesn't get better than that. Down it goes. That was a real nice trend. Okay, let me jump over it. And this was another buy signal here. Got to have that big arrow. Got to have the 3 minute. And that one went higher. So let me jump in and show you the Russell. The Russell is a really good one, especially if you have a smaller account, because you have to have a little more, the margin. You have the bigger account to trade the Mini Nasdaq. I don't suggest the ES because it's just so choppy. Now, certain days it might be okay, but in general, it's a very choppy chart. Very, very choppy chart. So again, here the market opens up. Here's the 9th, Eastern. So it's like 9:35, a couple minutes after the market opens. This is what you want to see. Perfect triple confirmation trade. Perfect triple confirmation trade. Big, a 3 minute sell signal, the big arrow. 2 minute sell signal, the medium sized arrow. 1 minute sell signal, it's red, the red dot. And then the red price bar. Look at this trade. As long as you stay under these red dots, stay in the trade, you're safe. That means you're in a downtrend. No reason ever to get out, especially if the bars are red. Stay in the trade. You're safe. Okay, now let's look for the two greens. Never hit it here. Never hit it here. Two more greens. Stop goes above right there. Never hit it. Two more greens. Finally stopped out at 1960. It got short at 92. Let's call it 90. It's 30 points profit. That's $50 a point in the Russell. It's $1,500 for every one contract that you trade. Super trade right there to start off the day. Russell's a good one if you feel the Nasdaq is too fast, which it really is. I can understand that. We like the Nasdaq, but the Russells is a good second choice if you feel the Nasdaq is a little too quick, or you have a smaller account. You don't need as much margin to trade the Russell. Obviously, one big no trade zone. We had another short right here, triple confirmation. I'm going to get out at the blue bar there. It's a small winner, like a point. And we have a small losing trade here because once it closes above these red dots, you're out. Once it closes and breaks above resistance, which is our protection, we're out. Those little red dots. We had another great trade right here. Triple confirmation again. Software is screaming at us, get short. Everything is red. 1 minute, 2 minute, 3 minute. There's our two greens. Stock goes 1 point above the top of the green bar. Never hit it. Here it closes above the red dot. We're definitely out over there. So we're out at 1951. We got short at 1950, we'll call it 8, even though it was 9. It was a 7-point winner. That's a lot of money, 7 times 5 is another $350. We were up 1,500 going into this trade, trading just one contract. You trade 3 or 5 or 10, like many clients do. Well, now you hit a home run. Okay, let's jump into the Erickson. Can you do the same for ES? You can, but as I repeat, the ES is much harder to trade. Trading is so much hard. It's hard enough. Let's not make it harder. Let's make it easier. The ES is a very choppy chart. Very choppy compared to RTY, the Russell, and Nasdaq. There's no comparison. I watch it every minute of the day for 16 years. It's not even close. But you certainly can if that's what you want to do. Okay, now we're going to go over to the scalp chart because I'm already getting near the end of the session here. But this is a great chart if you can't stay in those trades and handle those up and down drawdowns like we just saw. Perfectly fine. Use the scalp chart. This is a simple, easy chart to trade. Really simple. All you need to do, if it hits the blue dot, as long as it doesn't close under it, in other words, like right here, closes just slightly above it, we're going to buy it. Doesn't matter if we got red dots or red arrows or no. Just simply hits a blue dot or a blue arrow. This is the 3-minute support. This is 1 minute support. And you got to do this on the Nasdaq, or I would suggest you do it on the Nasdaq. You just put a bracket order in so that once it goes to 5 points, you're automatically out. This one went to 20 points, which is $400. We're only out at the 5. This is for scalping. You're in and out in a minute, so it's extremely low risk because you're only in the market like a minute, and then you're out. Just jumping in and out a minute. Okay, we're averaging 2 out of every 3 winners, and it's 20 trades a day. That's a pretty sweet profit on a daily basis, on average. They'll be losing trades, they'll be losing days. I'll guarantee you that with all able trend indicators. There's no perfect system. There's risk in trading, and I guarantee you they'll be losing trades. I don't want to mislead anybody. But here, closes, hits the blue dot. Stop goes 2 points under the blue dot, but we have to wait for it to close. So long as it finishes above the blue dot, 1 minute later, it goes up 5 points. It's a $100 bill every time you get 5 points for each one contract that you trade. Trade 2 contracts, it's 200. Okay, this is the only time we get in a trade if it doesn't hit a red or blue dot or a red or blue arrow. At the 3-minute arrow, you've got the big dot. Got to have that big dot. The open of the next bar, we go short. 10 seconds later, it's another $100 bill. Okay, so good start today. 2 trades, 200. Okay. Doesn't quite hit the red dot here, no trade. And this one closes above the red dot. No trade, no trade. Where's the next trade? No trade, no trade, no trade. Now, you say, how about in here? It's too tight. The red resistance and the blue dots are too tight. Okay, and I go over this in the one-on-one trading session. So I strongly suggest, so that everybody gets their money's worth, is to do the one-on-one trading session. I always do a 15-minute one-on-one trading session. I can show you more in 15 minutes than you can do on your own in a month. It's so much easier that way. But I do these webinars twice a week, although Thursday night is New Year's Eve, so I'm assuming not a lot of people will come. I'll be here to give it a go, but I'll give it a go anyhow. When you have resistance above and the red dots below, like I talk about in all the webinars, and it's important to watch all of these. I do 100 of these a year, twice a week. So you can go back and really only the last 5 or 10. I mean, would probably be the most relevant. You don't have to go that far back. But you got red and blue together right here. Just leave it alone because it doesn't have enough of a runway to go to get our 5 points. Okay, just leave this all alone. Yeah, there were some winners in there, but I'm not going to count those. Perfect right there. That is just an absolutely textbook case right there. Hits the blue dot, closes just a little, just a tick above it. 1 minute later, we got our 5 points. It's another $100 bill. Sweet. Okay, again, real tight in here. Leave it alone. Too tight. Doesn't have any room. Hits the red dot, it's going to stop. Hits the blue dot, it's going to stop. Yes, this is a winner right here. Yes, that's a winner right there. Not going to count it. It's not enough room for it to go. You got to have a runway. It's got to go. Okay, next trade is right there. Hits the blue dot, closes above it. 2 minutes later, we got our 5 points. Another $100 winner. Got to be up about $400 or $500 right now. Here's a losing trade. Hits the blue. Got to be fair. It's certainly going to be losing trades. No perfect system. Hits the blue dot right here. Let me zoom in closer. Hits the blue dot right here. Closes above it, but then it goes 2 points under the blue dot. So that's about that's 4 points. I'll call it. I'll stretch that to a 5-point loss. Okay. Hits the arrow, and even in between the arrow, perfectly fine. Closes above it. 1 minute later, we got the 5 points winner. Hits the red dot, closes under it. 1 minute later, another $100. Now we got about 10 trades, about 7 winners, so we're doing really, really well. My guess about scalping the RTY. Yeah, I like scalping the RTY. I do like that. Yeah, yes, you can. Again, Nasdaq is always your first choice to either day trade, scalp, because it has more movement. It's just mathematics. It's got more movement and more volatility, but it's quicker and you need more margin. So if you like a slightly toned down chart, do RTY, and we just go for 1 point in RTY, which is $50 instead of the $100. We go for an NQ, the 5-point target. The RTY is just a 1-point target. So it's a little slow. You might like that better. It works well too. Certainly does. Yes, sir. Okay, and you get the picture. So that's how we do it. Okay, this would be a losing trade. I like to purposely point it out. Hits the red dot, closes under it. We lose 5 points because it broke above the red dots. Ugh, we don't like that. Okay, winning trade right here. Any one of these you could get in on, or here too. Any one of those you got in, a couple of minutes later, clearly got your 5 points. That's another $100 winner. So this is how we do it. This is what's working consistently well for years. I think you're going to like what you see here. I'll be glad to help you anytime. The big holiday sale goes on for 2 more days. However, feel free, if you're on a trial, or you just start a trial anytime between now and Thursday, which is the last day of the year, you get a whole month. You lock in the holiday pricing. So if you're on a trial now and it doesn't end until sometime in January, you're still good. You still get the big sale. Because then after your trial would end on January 1st, whichever the prices are going to shoot up higher. But again, if you're on a trial right now, don't worry. You don't have to purchase it. You get a full 30 days. It's only fair to you. So even if your trial doesn't end, like say you got a trial today, you have until the 29th of January to lock in the holiday pricing if you want it to continue. If you don't, that's fine also, of course. It just automatically shuts off. Eric's on 1-to-1 on the scalping. Yes, it's about 1-to-1. So when you're hitting 2 out of every 3 and you got a 1-to-1 RR, boy, those are fantastic odds in our favor. Yes, sir. All right, so I hope that's helpful. Anything I can do for you, just call or email anytime. ronc@ablesys.com. Always here, always glad to help. Happy holidays to everybody and stay safe.